It looks like Solana is doing pretty well in the last few weeks. We went from $130 all the way to $170, but not everything that shines is gold. In the end, it's all about opportunity costs, and Solana actually, relatively speaking, isn't doing that great. In this video, we are going to look at the data most people are not considering. We are going to figure out whether or not Solana is a good investment right now relative to the rest of crypto and where the price might be headed from here. Have a look at this long-term Solana chart. Now, this is a somewhat common chart. It is relevant because Bitcoin is the least risky of the cryptocurrencies. If we take on more risk by buying Ethereum, by buying Solana, etc., we should also get more long-term performance. Why else take on additional risk? It's all about risk-adjusted performance. And for the last 4 years, Solana unfortunately underperformed Bitcoin by 66%. We had a massive crash when FTX collapsed. Then we had a nice recovery with the adoption of retail with mainly meme coin trading. And then meme coin trading started to die down somewhat again. And now Solana, relatively speaking, is having a hard time. This year is a drop of 50%, right? We should not underestimate it. This is the logarithmic chart. On a linear chart, the moves look much more dramatic. Really, I believe there's only 3 major cryptocurrencies that are worth holding potentially long-term. Bitcoin, Ethereum, and Solana. Everything else is just short-term speculation. Everything else has a lot of competition. Now, Bitcoin is just the store of value. Ethereum is the first smart contract platform that's used mainly by institutions. And Solana is the retail chain. It has very little individual transaction fees, but at the same time, it also has some kind of centralization to it as well. And so when we look at Solana relative to Ethereum, in the end, what we are measuring is, do we currently have retail driving the prices or institutions with more capital to move? And again, the meme coin trading helped Solana massively. Solana outperformed Ethereum by almost 900% during a time span of less than 2 years. But now things are turning around. We are falling through a medium-term support line. And that's kind of surprising because a lot of attention should be on the Solana chain right now. Here are the most viewed cryptocurrencies in all of crypto. Pump.fun is the meme coin launchpad on Solana. Pudgy Penguins is on Solana as well. Bonk is on Solana as well. So the major attention magnets in crypto are currently on Solana, yet Solana is underperforming Ethereum. So what's really going on here? Wall Street is going on. It's not anymore the retail investor that determines where a price is going. It's now the big money. And what we see over here, that's the inflows into the Ethereum ETF. And that has recently reached a new high. More than 300 million moved in on a single day. When we annualize the last 14 days of purchases, we get to 6.5% of the entire Ethereum supply getting absorbed via the ETFs. That's a very similar number to the Bitcoin ETF. That's only at 5%. And the ETFs do have an impact. This is the number of Bitcoin that's held in the Bitcoin ETF over the long term. So that's the thing about the buyers currently, right? It's not the retail investor that's getting short-term super excited about crypto, buys in, hopes for a continued rally. And if the continuation of the rally doesn't happen, retail investors also sell very quickly in panic. For the Wall Street investor and for the institutional investor, it's just an allocation, a small allocation in an overall broader portfolio. There tends to be just long-term accumulation without that much selling. That's why this line tends to just go up long-term. For Bitcoin, we don't just have the ETFs, we've also got the Bitcoin treasury companies, right? The Michael Saylor companies of this world, MicroStrategy purchasing regularly. Really, the major problem with Solana is that it's getting used mainly for meme coin trading. And meme coin trading is a player versus player game. There is no value being created. It's simply just a skill game, an insider game, a mechanism that moves money from the vast majority of traders to a small minority. And as capital concentrates towards that minority, the market tends to slow down. The most liquid trending token on the Solana chain right now is the recently launched Pump token. But it's not just the meme coin trading from the Pump.fun ecosystem where people got burned. People also got burned with the Trump meme coin, right? The largest meme coin that has ever been launched. It peaked at above $40 and is now down to around $10, a drop of almost 80%. And there's a good reason for that drop, right? It's tokenomics. Over time, we see more and more of the supply hitting the market. And when the demand doesn't grow as quickly as the supply, of course, the price has to go down, right? The price is a consequence of demand versus supply. When we play a game where the capital concentrates in the hands of a few people and there's no new capital flowing in, of course, the market has to cool down. This here is the number of deployed transactions on the Pump.Fun ecosystem. And this peaked at the beginning of the year and since then is declining rapidly. Here's the number of monthly decentralized exchange transactions. Now for Solana, that tends to go up over time. That's the black vertical bars. And the meme coin trading on Pump.Fun obviously helped Solana as well. But that's actually now shrinking. If we remove the Solana transactions, we can again see the peak happening at the beginning of the year. In the last month, Ethereum outperformed Solana in terms of capital growth. We saw an increase of 23% of total value locked on the Ethereum chain versus only 10% on Solana. Yes, Ethereum doesn't get used as much on chain anymore, right? This is the capital on the Ethereum chain long term, and we did peak in DeFi summer in November of 2021. Then we had the Terra Luna collapse and the FTX implosion, which caused a massive contraction. But since October of 2023, we are expanding again. But we are not yet at the prior heights that we had during DeFi summer. That's for Ethereum. For Solana, that's different. Here we did hit a new all-time high. But recently, we aren't growing that much anymore, at least measured in US dollars. Measured in SOL, it doesn't look as bad. As in, a lot of the fluctuation in the total value locked on the Solana ecosystem is just price fluctuations. It's not necessarily the usage on chain that's changing much. Just have a look at the trading volume on the decentralized exchanges on Solana, measured in SOL, not measured in US dollars. This actually tends to go up year over year. Yes, there is some fluctuation, but in general, this tends to grow. More trading volume, of course, also means more fee generation, which means more return for people that provide capital. But again, the problem for Solana is the inherent nature of its usage recently. It's the meme coin trading, the player versus player game, and as capital concentrates, the number of active addresses tends to decline. And surprise, surprise, this is happening since the end of 2024, beginning of 2025. Here's the number of active addresses over time. Now, all of the data we looked at seems to paint a rather gloomy picture. But is there potentially some hope for Solana? Maybe, because at some point we might see a capital rotation. Usually what tends to happen throughout the cycles is that first the Bitcoin appreciates, that then people rotate over to Ethereum, and then afterwards to Solana. Just have a look at this over here, the net position change. In orange, we've got Bitcoin. In blue, we've got Ethereum. First, Bitcoin tends to appreciate, and then Ethereum lags behind. We saw this in 2017. We also saw this in 2020. We saw this to a smaller degree in October of 2023, but definitely in September of 2024, we had the same effect. First, it's Bitcoin, then it's Ethereum. And so since April of this year, the Ethereum dominance is going up, and I actually expect this to continue to rise. And so the bull case is that once the rotation to Ethereum has finished, that then the gains might move over to Solana, that then maybe the attention for Solana picks up again, right? Because this is usually how it happens. We see the massive rally in Bitcoin. Bitcoin at some point is already very expensive. Ethereum has followed as well. It's also very expensive. And then people are looking for the next Bitcoin, the next Ethereum. And if at that point Solana hasn't performed that well, people might just rotate over to Solana. In the end, again, Solana is the retail chain. And when there's more retail interest, Solana will appreciate as well. And maybe at some point, we'll also get an approval of an ETF for Solana. So maybe traditional Wall Street will end up buying SOL via a BlackRock ETF, for example. Have a look at the search interest for Bitcoin. Because Bitcoin recently went up quite a bit, people start searching again. We are not yet at the peaks that we saw in November of 2024 when Bitcoin hit 72K. We are also not at the peaks that we saw prior to that, but we are now going up. That's for Bitcoin. Now compare this to Solana. Solana is still rather low in its search volume. And again, this might change once the real capital rotation happens. And so currently in this moment, I believe that Ethereum is the better bet compared to Solana. I think there's a good likelihood we will see this ratio going lower. And again, that's going to be fueled by Wall Street. But at some point, this could turn around. Again, once Ethereum has already hit heights that make it less attractive of an investment opportunity, where then people look elsewhere. I'm not getting tired to mention this. This is the performance of the smaller altcoins in the last year. Pretty much everything went down, while Bitcoin performed very well. Here, just as a reminder, right? Bitcoin in the last year doubled in price. How many of the smaller and more risky altcoins were able to compensate that risk, to actually outperform Bitcoin? This is 100 tokens here on the screen. We've got this outperformer over here. We've got this outperformer over here. All the rest underperformed Bitcoin in the last year. This is 100 assets, so 98 out of 100 assets did worse than Bitcoin. Now there are two potential ways to deal with this. We could either just become Bitcoin maximalists. We just buy Bitcoin, maybe Ethereum and Solana, that's about it, and we forget about all of those other altcoins. But there's also a second way, and that is to take advantage of this mispricing. In the last 3.5 years, the market cap of the altcoins underperformed Bitcoin by 77%. And the reality is even worse than what this chart here implies, because again, this is a comparison of market caps. The Bitcoin market cap versus the market cap of the altcoins. But when we invest into an altcoin, we don't get the performance of the market cap. We get the performance of the price, and there can be a big difference. Usually there is a big difference. This is WorldCoin. This is the market cap of WorldCoin over time. And this is actually not that far away from the all-time high. But compare this to the price development of WorldCoin during the same time. This is very far away from the all-time high. And this is in the end what the retail investor is getting. Why is there this discrepancy? It's because of the tokenomics, right? It's more and more tokens that hit the market. It's the insiders that are cashing out. It's the early investors, the VCs that are cashing out. It's the team that's cashing out. So the teams get more and more tokens allocated towards their wallet, right? They get vesting unlocks, and then those unlocks get sold. So this is the WorldCoin supply over time, right? It moved from 500 million to currently 3.6 billion, more than a 7x in supply. That's what's causing this massive difference. That's why investing in the smaller altcoins is such a bad idea long term. That's why 98% of the altcoins did worse than Bitcoin in the last year. And this is a structural problem of the altcoin market, right? Everybody can launch an altcoin. Everybody can set up any kind of vesting unlock. The supply can grow however it wants. There's no laws around this. There's no regulation around this. And so of course, the average retail investor gets milked over time. The altcoin market needs at least around 500 million, potentially more than that, maybe 600 million in US dollar inflows every single week in order to keep the prices just stable, right? This is the unlocks across the tracked tokens on this website. Without the demand coming into the altcoin market at that rate, we continue to see this kind of development because again, there's just constant sell pressure happening. And so let's say our thesis is that this structure will not change, right? That the VCs will continue to dump on the retail investor, that the insiders will continue to cash out, that most small altcoins will continue to do worse than Bitcoin, Ethereum, and Solana. We could just stay away from the altcoin market as a whole, or we could try to make money from that. And that's what I'm personally doing. I try to take advantage of this opportunity. I'm trading in this way already for more than 4 years. And what we're seeing over here in black, that's my performance that I made compared to if I had just dollar cost averaged into Bitcoin. So dollar cost averaging is in light gray, and the black line, that's what I made. And this is just monthly data out of my personal Excel sheet. It's close to 4 years of data now. So the TLDR is that I bet on relative valuation. So I bet on Bitcoin, Ethereum, Solana going up, and I bet on all of those crappy small altcoins to go down, relatively speaking. I do 2 positions at the same time. Long, one thing, short, one thing. So in the end, the position is delta neutral. It's not impacted by the overall market that much. I used to do this with borrowing and lending platforms like Aave and Venus Finance. Now, recently, in the last 2.5 months, I moved this to perpetual futures. And that experiment is going very well. So here's the development over time. I started with 40K in balance and that moved to 60K. So 50% of return in roughly 2.5 months. And there wasn't too much volatility along the way while making those gains. I am sharing my own trades as well. So that example of WorldCoin, right? I actually made money from that. So I posted how I was betting on falling prices of WorldCoin, how the tokenomics of WorldCoin aren't that great, and doing a relative valuation bet might make a lot of sense. And so that was when the price was over here, and of course the rest is history. WorldCoin relative to Ethereum went down by 40%. And if you then have smart leverage, right? Leverage that is limited in risk because of the use of stop losses, etc., we can make a lot of gains. So this is then when the community copy traded that particular position. Yeah, I always like these kinds of comments, right? Premium has already paid for itself, etc. But the community does not just copy trade me, right? There's all kinds of opportunities, and those opportunities are shared in the different chats as well. And so there are two ways to go about this, right? Either you just learn it yourself, you do the active trading, you figure out what kind of altcoins are incredibly inflationary in nature, which kind of altcoins tend to go down versus Bitcoin the fastest, then exchange the ideas with the community and open up the positions yourself. So that's the best approach if you don't yet have that much capital, but you do have some time. So there are two essential videos for that. There is this one here, using perpetual futures on Hyperliquid to bet on relative valuations. And there's this video over here, risk management with relative valuation bets on Hyperliquid. So that is two tutorial videos among a database of all kinds of exclusive content. And so that's the do-it-yourself approach, right? That's currently $125 per month. And if you don't like premium, just message me within the first week and I'll refund you 100%, no questions asked. But if you're among the people that have a lot of capital, but not that much more time, that maybe have to focus on a high-paying job or on a business, and it simply just want to allocate towards that strategy, then you can also just automatically copy trade me. This is still somewhat experimental, right? We just started this 2.5 months ago, but that's reserved to the people that subscribe to the annual membership, where, by the way, you also get savings of $250 per year. You can start out with monthly and then upgrade to yearly later, or if you don't want to learn from the very beginning, just start out with yearly, that's fine too. You will get all the instructions on how to deposit to the capital pool, and then all the trades that I make will automatically reflect towards your capital base as well. Of course, I don't have the guarantee that we continue to make money, but in general, I do believe that the odds are on our side. Again, we make money when the altcoins continue to do worse than Bitcoin and Ethereum and Solana. And I do believe that's a structural problem with the market. There's constant sell pressure across the board, and some assets are worse than others. And that's where the real outperformance is, right? It's not in the common strategies trying to find the next 100x altcoin, right? This is how everybody gets burned. This is how everybody loses their funds. Please don't make that mistake. Please do something different to the masses, right? If you do the same things as the masses do, then you get the same return as everybody else. And again, returns are very much concentrated towards just a few players in the market. The vast majority of people loses, especially trying to find the next 10 or 100x meme coin. A link to premium should pop up directly over here on the screen. Just click on that. It will lead you directly to the website. If it's your very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube, or see you in premium. Cheers.